Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. And today we're diving into Pure Bioscience Inc. Its latest report, a meeting that seems to have a few interesting votes before we dive in. If you find value in breaking down these complex financial documents into plain English, make sure you hit that subscribe button. And hey, we've got a fantastic community over on our Discord server discussing these very topics with a link in the description below. We're looking at a current report Form 8K from Pure Bioscience Incorporated filed on the 20th of February 2026. This filing details the happenings at their annual meeting of stockholders, which took place on the 17th of February 2026. The big news here isn't necessarily a major financial win or loss, but rather the outcomes of several key votes that took place, shaping the future direction and leadership of the company. So, what exactly did the shareholders vote on? First up, the election of directors. This is where the people who own the company, the stockholders, get to choose who will lead them, essentially selecting the board members who will oversee the company's operations for the next year. It is a pretty crucial vote, and it looks like the stockholders overwhelmingly showed their support for the current slate of directors. For example, Tom Y. Lee, CPA, received a massive 97.82% approval. The story is similar for all the other nominees of Van Chen, Tom Myers, David M. Rendell, Robert Bartlett, Bernard Blotner, and Darren Zaire. They all secured very high approval ratings in the high 96 to 98% range. This indicates a strong confidence from the shareholders in the current leadership team. Looking at the numbers, we see that for Tom Y. Lee, CPA, there were 59,860,307 votes cast for his election. Only 1332527 votes were cast to withhold his election, and a significant chunk, 12,628,029 shares, were what are called broker non-votes. These are shares held by brokers that did not receive instructions from the beneficial owner on how to vote, so they were not counted on this particular proposal. The consistent number of broker non-votes across all director elections, 12,628,029, suggests that the shareholder base represented by brokers largely abstained from voting on director elections, while those who did vote were overwhelmingly in favour. Next, the stockholders voted on ratifying the appointment of their independent registered public accounting firm, Weinberg & Company, Pennsylvania, for the fiscal year ending the 31st of July 2026. This is essentially a vote of confidence in the company's auditors, confirming that the company trusts them to examine their financial statements and ensure everything is in order. And this vote was virtually unanimous. A staggering 99.81% of the votes cast approved the appointment. The table shows 7,300,8365 votes were cast for this ratification. Only 137,649 votes were against, and there were 674,849 abstentions. This near-perfect score shows that shareholders are very comfortable with the chosen auditors. Then we move on to executive compensation. This is a non-binding advisory vote, meaning the company asks for shareholder input on how much they should pay their top executives, but they don't have to follow the vote. However, it is still a very important signal of shareholder sentiment. And here too, the stockholders approved the compensation with a strong 96.68% of the votes cast in favour. The breakdown shows 5,842,8096 votes for, 2,009,89 votes against, and 763,649 abstentions. Again, we see that 12,628,029 broken non-votes, indicating that those shareholders did not cast a vote on this matter. While the approval is high, the against votes, while small in percentage, do represent a tangible number of shareholders expressing some level of dissatisfaction or concern with the executive pay packages. Perhaps the most significant vote, and one that saw a much closer result, was the approval of an amendment to the company's certificate of incorporation. This amendment aims to increase the authorized number of common stock shares from 200 million to 250 million. Such an increase can be a precursor to various corporate actions, like future stock offerings for fundraising, acquisitions, or stock-based compensation plans. This proposal passed, but with a much more modest majority receiving approval from 63.87% of the outstanding shares. The numbers here are 7,147,2843 votes for and 2,298,269 votes against. There were also 49,751 abstentions. This result suggests a divided opinion among shareholders on this particular move. While a majority approved it, a substantial minority either voted against it or chose not to vote. indicating potential concerns about dilution or the strategic reasons behind the proposed increase in authorized shares. This is a key area to watch as the company might utilize this increased authorization in the future. In conclusion, Pure Bioscience Incorporated's annual meeting showed overwhelming confidence in its leadership and auditors. However, the vote on increasing authorized shares signals a potentially more cautious or divided sentiment among some shareholders regarding future dilution. The company seems to be navigating shareholder concerns, but the 250 million share authorization needs careful management and clear communication to the market to maintain investor trust. Now, looking at these results more broadly, Pure Bioscience Incorporated appears to be in a stable position with its current leadership. The strong endorsements for directors and auditors point to a well-oiled machine in terms of governance and financial oversight. However, the amendment to increase authorized shares is a double-edged sword. On one hand, it provides the company with flexibility for future growth, which is essential in the volatile biotech sector. On the other hand, if not managed strategically, it could lead to significant dilution of existing shareholder value, a point clearly reflected in the near 36% of votes cast against or abstained on that proposal. The company's next steps in leveraging this increased authorization will be critical in determining whether this move proves to be a strategic advantage or a point of contention for its investors. Alright, that is our breakdown of Pure Bioscience Incorporated's latest filing. What is your take on these votes and what they signal for the company's future? Do you think increasing the authorized shares is a smart move or a red flag? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives into the world of corporate finance. Don't forget to check out our Discord in the description. Thanks for watching. See you next time.